Let me talk briefly today about investments in Africa. The Africa continent has a reputation for being difficult for most investors due to regular political instability and the excessive interference of the governments in market transactions. In much of Africa, with the exception of South Africa, governments interfere heavily on the market and the banking system. This interference has effects on what we call investors' confidence in an economy. But this does not mean investments cannot be done in African markets. One of the most popular investments that has thrived in Africa over the years are what we call mutual funds. Mutual funds are investment programs funded by shareholders that trade in diversified holdings, and it is often professionally managed. There are a few mutual funds presently investing in African equities. Some popular ones presently in the African markets include the Bellevue funds. The fund aims to achieve long-term capital growth. It invests at least 2/3 of its net asset in selected shares and other equities of companies in the medical technology sector. So this is a fund that is gaining ground and getting very popular in Africa. The second fund I would like to mention here is a fund we call the DWS Invest Africa. This fund focuses on African projects unlike other funds. The DWS Invest Africa is led by a certain Sebastian, a well-known investor, banker. We also have the Threadneedle Stanley Africa Equity Fund. This fund seeks to achieve medium to long-term capital growth. So those that are looking for investments that are long-term, it's a very good fund to take a look at. They are called the Threadneedle Stanley. It's an African equity fund. Another fund that has over the years gained ground in much of African market is the JP Morgan Africa Equity Fund. This fund considers financially material, environmental, social, and governance factors in their investment analysis and their investment decisions. Another fund I would like to mention here that has gained grounds in the African market is the Montlake Management. It is a fund out of Dublin in Ireland. This investment firm is the leading independent and privately owned asset management firm. It is regulated by the Central Bank of Ireland. We have also what we call the ML Draken's African Fund. And finally, we have the BPI GIF Africa Fund. Some people call it the Alquity Africa Fund. It is run by the investment boutique in London called Alquity. So the most developed and the most liquid equities in Africa is the Johannesburg Stock Exchange out of South Africa. So the South African market offers a broad range of sectors, market capitalization, and financial instruments. Most investments coming into Africa go into South Africa, they come into Nigeria. We have major stocks in Africa. When they talk about stock markets in Africa, they talk about South Africa, they talk about Lagos, they talk about Nairobi, they talk about Cairo, and they talk about Casablanca Stock Exchange, which is in Morocco. Private equity and venture capital have also become very important drivers in the African economy. Some major asset managers in the African markets include Amethyst. They operate out of Paris in France. We also have the German Development Bank. They invest in African agriculture and they invest in agro businesses in Africa. So corporate organizations and states that are looking for agro-industrial investment, this should be your first port of call, the German Development Bank. It is called the German Development Bank Agricultural Projects for Africa. Now, the question is this. Why is it difficult for African businesses to easily attract investment funds or investment capital as obtained in other climes? First and foremost, is the issue of trust and inconsistencies. Some investors allege that most business owners in Africa are not straightforward in business dealings and do not keep to commitment and time. Listen to what I just said, commitment and time. Time management and keeping to commitments may sound flimsy, but it plays a major role in international business development. This is a major concern when it comes to investors' confidence in an economy. The second is lack of business experience. One thing we notice is that most projects in much of Africa that are seeking investors' income, they are new businesses with little or no track record for financial accountability or financial discipline. Not that investors do not put funds in new businesses, but investors prefer businesses that are stable, businesses that can show financial accountability, and businesses that have evidence of financial discipline. Third is that most business models coming out of Africa, majority of them are not sound and they are not bankable. What do I mean by this? A sound business model should include an executive summary, an elevator pitch, or a high-level introduction with sufficient business or personal capacity whose qualification is sufficient to propel business success. The plan should have a defined goal, setting both short and long-term quantifiable objectives. These are the things investors want to see. The plan should be able to address a defined audience, a defined market, and should clearly show a promotional component, including defined budgets and expenditure. Most plans that come out from much of African businesses do not contain most of these components, and to an extent, investors find it difficult to put funds in so many projects in Africa. So this is what a prospective investor wants to see. Now, another factor is the weakness of the insurance sector in Africa. Listen to what I'm about to say. It should be pointed out here that the degree of the independence of the legal system in a country affects investors' confidence in that economy. The ability of the insurance companies to meet liability claims and how timely they meet their obligations also affects investors' confidence. This has been a big problem for countries such as Nigeria, with a weakened insurance sector that over the years has not been business friendly and lacks consumer confidence. Once consumers lack confidence in an insurance sector, once it is often a fight to pay claims, correspondingly, it affects investors' confidence in that particular economy. Finally, poor financial, banking, and tax reporting affects investors' confidence. You come to an investor, your banking is showing that your business runs millions and millions of naira, and your tax documents show that you are just running a very small business. Now, when these things do not balance, it affects an investor's confidence to do business with you. So for most African governments, the financial reporting systems are very poor. If we can build these institutions and financial systems, then new investments will flow into Africa, and gradually we can catch up with the rest of the world. We want to be in business. We want investment capital to flow into our countries. It is simple. We just need to do things the right way. Time management. I am Prince Will Odidi. You can reach me on investafricatoday@yahoo.com. Thank you very much.